Candle range theory works better if you combine it with multiple time frame analysis. In this video, I will teach you how to do that on Forex market. You will learn the best time frames for trading CRT and the complete step-by-step entry strategy. Take notes and let's get started. We will look for a candle to trade its range on a daily time frame. We will need a strong bullish or bearish candle. Such a candle should have a big body and tiny or no wicks. Here in Euro Aussie pair, I see a great example of such a candle. Look at the last closed daily candle. You can see that it is a high momentum bullish candle with almost no wicks. We will trade the range of that candle and we will need to underline its range from its low to its high to understand the exact boundaries of that candle. Learn SMC ICT trading with my book. Learn complete basics of SMC trading and get a complete profitable trading strategy. For more info, check the link in the description below. The book is also available on Amazon. After we spotted a proper candle for CRT trading on a daily time frame, we will analyze a 4-hour time frame. The first thing that we will look for on a 4-hour time frame is a liquidity grab. If we spotted a bullish candle on a daily time frame, we will look for a bullish liquidity grab above the high of its range. And of course, we will also discuss how to trade bearish candles. Just keep watching. And as you can see, we already have a valid liquidity grab. As you can see, the price already violated the range of our bullish candle on a deal, and you can see that just recently the price updated the high. The second thing that we will look for analyzing a 4-hour time frame is the closest strong liquidity demand zone, because we will use that to spot a confirmation. In our example, the closest strong liquidity demand zone is right here. As you can see, we have a very important intraday structure and we can see a clear willingness of the buyers to buy from that. Why do we need this liquidity zone? We will assume that buying orders are concentrated within that zone. And in order to confirm that the price will drop to the low of the range of our candle on a daily time frame, we will need a clear sign of strength of the sellers on a 4-hour. And the bearish breakout of that zone will provide a strong confirmation. So our signal here will be a breakout and a 4-hour candle close below that zone. When the price violates that, it will confirm the strength of the sellers for us. After that, we will expect that the price will drop lower. And to understand where exactly the price will drop to, you will need to find a liquidity demand zone based on the low of the candle range that you spotted on a daily time frame. In our example, we have a strong liquidity demand zone here, and we will expect a bearish continuation to that area. To execute the trade, as I said, we will wait for a breakout and the 4-hour candle close below this liquidity demand zone. Then we will sell the pair on a retest of that broken liquidity zone and we will aim at that structure. We will set our sell limit order on the lowest candle close within this liquidity zone. So our sell limit order will be right here. We will set our stop loss above the highs of liquidity grab. It will be a very safe stop loss for the trade. And our take profit will be based on the liquidity demand zone that we spotted. So that will be our plan to sell Aussie dollar pair. And that's a complete breakdown and a plan to follow. Make sure that you do that step by step. Now let's discuss how to trade a range of a bearish candle. Here on Euro Aussie pair on a daily time frame, I see a strong high momentum bearish candle with tiny wicks. That will be the perfect candle for trading CRT. After this candle was spotted, I started analyzing 4-hour time frame. On the 4-hour time frame, I spotted a valid bearish liquidity grab below the low of the range of our daily candle. After that, we see a clear sign of strength of the buyers with the breakout of minor intraday liquidity supply zone. That confirms the strength of the buyers, and with the high probability the market will continue rising now. We can expect that the price will rise at least to the liquidity supply zone based on the high of our daily candle range. Buy position is opened on a retest of a broken supply zone, stop loss is lying below the low of a liquidity grab, and take profit is the low of a supply zone based on the high of the candle range. That is a complete plan to follow. A combination of two time frames gives a strong edge in CRT trading. Just make sure that you spotted a proper candle on a daily time frame, because that's the core of the strategy. Let me know your views in the comment section if you have any questions. Learn smart money concepts, SMC trading with my book. For more info, check the link in the description below. Also, traders, please watch my other videos.